Thank you. So good morning, everybody. So it's again a pleasure to be on call with all of you. So we had our board meeting and AGM yesterday, as you would all know, and we already posted our results. So before I begin, I'd just like to introduce my team who is with me here. I have a rather large team this time with me. So Nilesh Jain, who's our company secretary, he's there. Mansi, who works with me in my office, she's there. Kiran, who's currently he's in the finance department, is currently, kind of handling the show in finance. He's with me. And Amitabh Srivastava, who is our CEO for aftermarket business unit as well as railway business unit. He's also there on the call. So I would like to inform all of you that, of course, as you all know, Rajendran Arunachalam, our CFO, he had, left for some better opportunities elsewhere in Pune. So in the month of March, so we am glad to share that now we have, finalized and recruited a new CFO who will be joining us from, effective 2nd September, which is the date that is confirmed now. So he's again a chartered accountant and a CFA with 17 years of experience in multinationals. So he'll be there with us in the next call. So I just thought I'll put that point to all of you. We'll introduce him formally in the next call, and I'm keenly looking forward to his contribution in the growth of Gabriel India. Now coming to the business updates. Well, yeah, I think we all, I'm sure you all must have already had several calls with several auto companies, auto component companies as well as OEMs both. The mood is currently of literally doom and gloom. I think we have not seen such a bad phase for several, I must say now, decades. In fact, today you must have read that it has been the worst fall in 19 years. So we have the last such fall was seen in the December 2000. So after that we are seeing this kind of a 18% fall in sales. So that's what the status of industry is right now. Now, again, there are several reasons. I wouldn't want to share all of them with you, but from my perspective, it's like somebody put it very, very nicely. We are facing sometimes what happens is when our body gets a big major cut, you know where to put the stitch and where to put the bandage. But currently, as they say, our body is suffering from 1,000 cuts. So it's a culmination of several things that are happening in the market, right? Starting from the GST demon impact coming through, to of course the liquidity crisis, to changing emission norms, to increase in the cost of vehicles owing to all this. And overall, I think the sentiment, the buyer sentiment is really, really very low. So and of course, the confusion prevailing in the industry over the electric vehicle, introduction in India, that is making things probably even more, hazy. So I think all this put together, we are facing the brunt. So let's hope, the festive season, which starts from the first thing starts from Ganpati, but which is in the next month, the Ganesh Chaturthi. But I think even some things start from our Independence Day tomorrow. So I don't know, we are still fingers crossed, but let's hope things start reviving from now onwards. Coming to figures, again, you are all aware of the figures. In the quarter and July, I think every month, every month passes, it's only getting worse and worse, at least from April, May, June, July. It's not looking good. July had among the worst falls in PC, which was almost 30% plus down. Even two-wheelers, there was a dip in sale almost by 11%, which we had not seen so far. So overall, things are not really looking good. But as they say, when things don't look good, it's a good time to look at your efficiencies internally and use this lean period to become sharper, leaner, and more agile. So that's what we have decided both at Gabriel level and at Anand Group level. So we're using this time to see how best we can cut costs remove all those flab which normally gets added over times when things are very good. So that's what we are doing, and hopefully, not hopefully, in fact, I'm sure this will help us in the long run. So that is very briefly on the situation of the market. Now, getting into the presentation, if you move to the slide number, the first slide, which is actually slide 3. I hope all of you have the presentation in front of you. So it's slide 3. The revenues for the first quarter was 517 crores. So it was glad to share that despite what is happening in the market, we have been able to still hold our head above water. We still had a 1.3% growth. And if you see EBITDA, this is a quarter-on-quarter basis. So this is compared to the last quarter. There's Q4 of 18-19 compared to Q1 of 19-20. So it's on QOQ basis, as the slide says. So EBITDA we were able to improve. Also the PAT. So there has been, as I said last time, we are working on some closures that were to happen. So they have happened. Maybe very, very few are still left. But the endeavor is to at least sustain these kind of levels, going forward. If you move to slide number 4, the gross profit is up by 50 basis points. EBITDA is up by 130 basis points, and PAT, again, this is on QOQ basis. PAT is up by 90 basis points. Slide 5 has the details of the P&L. As you can see, the Q1, while compared to Q1 of last year, we still, could have done better. Certainly last year Q1, our margins were better, which is very clear on this slide. So we still have room to improve. But yeah, having said that, once we are built for volumes, it becomes difficult in a downturn to, still revert back to those kind of margins. But the endeavor remains that. Moving to slide 6, which is the segment mix. As you can see, segment mix is again leaning more towards the two-wheelers. So now it's become 67%, which is a combination of several factors. One being we were able to garner better market share, a better share of business, to be precise, from some customers. Also, some models that we are supplying are doing well in the market still. So that led to a better revenue of two-wheelers, and compounded with the fact that passenger car, as you know, from April 1st, the Maruti Omni got discontinued due to safety norms. So we were single source on Maruti Omni, so that has impacted. That model has got discontinued. And also, the Wagon R, which has started last year itself, but that is no longer with us. So both of these have led to a smaller share of passenger car. Commercial vehicle, of course, we are, as you know, we are, a very dominant player. So we mirror what is happening in the market. There, I would say it's absolutely the same trend as the market. And if you see the channel mix, you can see the aftermarket. We have actually inched upwards. We have improved the aftermarket. I think great efforts from the aftermarket team. We also launched some more new products even in this month. So that is, and also new products in shock absorbers. Again, as I said, we are using this lean time to see which products we can launch and quickly. So that's what we have done in a focused manner. So that has clearly yielded results, and it will in fact continue to yield good results going forward. Exports is down marginally because mainly the Colombia exports which we were doing. There also the market conditions are not really very good. So that's a temporary phenomenon that we are looking at right now. Moving to slide number 7, is just the trends. So yeah, like I shared last time, our EBITDA had dropped significantly. So along with me, the entire team has really put a lot of efforts to get it back up. I must say it's job well done, but job still in progress. So I think we still have to do more. So we'll continue on those lines. Slide number 8 is the balance sheet, which is they're in front of you. I'm open to any questions later on. In terms of slide 9, our debt is almost zero, as you know. The ROIC is also healthy, which is still at 29%. Yes, we have had some challenge on inventory being larger because the schedules are being, corrected downwards. So it takes some time for us to correct the inventory. So that is reflected here. Slide 10, glad to share that we have been getting this recognition, but we got this recognition this year again, which is 5th time in a row. So that is really creditable, which clearly now implies that this is, a great place to work is a way of life for us at Gabriel and at Anand Group. Some quick pictures of awards on slide 11. So we won the award from Toyota Kirloskar for the best environment promotion supplier. So this is very key to us, as you all know, whoever has visited our plants. And we believe this will also be a differentiator going forward. So we keep green very close to our heart. So it is great to receive such an award from us OEM customers like Toyota Kirloskar. We also got a spare parts award for the best support and outstanding supplier for the commercial vehicles of Tata Motors. And from Suzuki, of course, we had this award earlier itself, but this is mainly on the support on cost. So this is in brief we have, of course, as I had shared earlier, we have got other awards as well from many customers this time, which we had shared in the last investor con call, so I'm not repeating that. And we have, further to that, we have got several industry awards, which we continue to win at various geographies in India, be it north, be it south or west mainly. So that continues to happen. So this is, in short, quick walkthrough of our presentation which we have shared, and walkthrough also of our performance for the first quarter. Now, of course, I'm opening the call for any queries, and we are very keen to listen to your comments, observations, suggestions, and any inputs that you have to give. So thank you once again. Over to you, Neha.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Of Arun Agarwal from Kotak Securities, please go ahead.
Good afternoon, sir. So my first question is on the segmental revenues. Could you just highlight on a year-on-year basis as to what would have been the growth or the degrowth in the two-wheeler passenger vehicles, CVs and aftermarkets?
Year-on-year meaning?
As compared to first quarter last year.
As compared to first quarter last year. Yeah. Just a moment. So if you see, I have those figures. So commercial vehicle was actually a 6% drop.
Okay.
Passenger car was a 27% drop.
Okay. And two-wheelers you would have grown by?
Passenger car is more than the industry, as I said, for the reasons that I already shared with you.
Right.
Two-wheelers, we were actually able to improve. We had a growth of almost 15%.
Okay, that's two and three-wheelers put together, right? And aftermarket growth would be this quarter?
Aftermarket growth, we already shared, to 18%.
That's 18%. Okay. And so with which customers would we have gained market share in the two-wheeler segment? Because that's a 15% growth as against a 10% industry volume decline we had.
One is, of course, Royal Enfield, they launched this Continental Twins. So that model is the one that is doing well. The other models actually are, currently facing a bit of challenge. So that is continuing to grow. So that is with us. So actually that definitely helps. That still continues to, be in the ramp-up phase. There's a great demand. In fact, they've not yet opened all the export markets, so I see a big upside on that part. We are also able to get some additional share from TVS, plus, Suzuki, the model that we are supplying, that is also doing well. So all this, combined together has been okay. And two-wheeler as a whole, I must say, while there has been a drop of 11%, big drop in Hero, and as you know, we are not with Hero.
Yeah.
So that has kind of, I won't say helped us, but, just making the numbers look a little better.
So we would be like at 28-30% sort of market share in the two-wheeler segment now?
I would say it would be more in the range of 26%.
26%.
Yeah.
Okay.
So, Arun, I must admit that we still have to do an exact estimate on a quarter basis. We have not done that.
Okay.
But guess would be we must have inched up a little, so 26%.
Okay. So on your raw material cost, like you highlighted earlier in your remarks, that you had closed the negotiations with most of the OEMs, and there would be few left. But if you look at the historical, performance from Gabriel, our raw material costs generally have ranged, in a very narrow band of 71 to 72%, which inched up, to 72.6% last year, and now we are well above 73%. So, I mean, is it that we are not getting full negotiations from the OEMs, or, how is it working? Because it's still very high when we look at the historical levels,
Yeah, see, one thing you have to realize is a structural shift in terms of, since two-wheeler is becoming larger part of the pie, so naturally that will change the structure in terms of the raw material cost. So that takes it up partly.
Okay.
But the second reason, second reason is, of course, on the recovery front with customers, some of the commodities we still don't have a full pass-through, and, also the imports that we do from China, that is our call. So to that extent, we are still not able to completely recover. But now that the down cycle has started
right.
So that should, slowly, we should hopefully be able to bridge the gap.
Okay, so we should hope for this, the gross margins to inch up going ahead because of this down cycle and going ahead, yeah.
Yeah, that's right. The only issue, as I said, is the volume front.
Yeah, okay. And so on the other expenses too, we have seen the other expenses being pretty low this quarter as compared to fourth quarter and even first quarter last year.
Yeah.
Any one-off in that, or there's any deferment of expenses?
No. So that it is purely, as I said, purely our cost reduction efforts that we have launched in a very, very big way.
So on a quarterly basis, this is what should ideally be sustainable on these kind of numbers, volumes. Assume, that the volumes improve, then your other expenses might also see some increase, but on similar, it should be sustainable and similar.
I would think so, yes.
Okay. And so could you just
Sorry to interrupt, sir. Can you please come back in the queue?
Sure, I'll come back.
Thank you. The next question is from the line of Bharat Kinani from Sharekhan. Please go ahead.
Yes, sir. Thank you very much for the opportunity, and congrats for a decent top-line performance in given the challenging industry environment. So my question is to you is that we have outpaced the industry by a huge margin, if we were to say so, compared to a 10 to 11% drop in the industry. We have posted a flat growth on a YY basis on the top line. So my question to you is that since I believe that most of it is on account of the new business that you shared, obviously with TVS and some kind of ramp up in Continental Twins. So my question to you is that is this kind of an outperformance sustainable for the entire year, or would you like to comment on that? Is the same kind of outperformance sustainable on the top line?
Yeah, but so thank you for your compliments. On the sales front, yeah, we have been, as I said, I think we have done a decently good job. So it's a combination of several factors. One is that two-wheelers. Second is, as I said, the aftermarket growth continues to do well. And going forward, of course, the passenger car, which is currently down, the model of is that will get from also will happen. So we expect that we should be able to continue. I don't say that we can't. When the volumes are dropping significantly, literally every month, I really can't take a call with which way it will go in terms of the downward trend. But yes, we'll try to beat the market. Yes.
Okay, sir. Thanks and all the best.
Thank you.
Thank you. Participants, if you have any questions, please press star and 1. The next question is from the line of Pawan Aluwalia from Laburnum Capital. Please go ahead.
Yeah, thanks. You had articulated a growth target maybe 5 years ago of getting to about 2,000 crores in revenue, and it looks like you've hit that. Are there any other medium-term sort of growth targets that you've set, and if so, what are they, and what are the drivers you think will get you there? And secondly, you've talked about growth targets. How do you think about profitability, ROIC, etc.? Are there basic hurdles that you use saying, look, if the business cannot earn an ROIC of X, then we won't do it? So would appreciate your thoughts on both of those matters.
Okay, yeah, Pawan. So, the growth targets, yes, 2,000 crores we had set off, and yes, we did achieve that in 18-19. Short term, I won't comment on the short term, but the long term, clearly, you must have received the annual report or gone through the annual report. The clear vision that we have is being in the global top 5. Now, global top 5, has several connotations. One, in terms of, the technological capabilities, more, perception, and of course, in terms of size. So, while we have not put a figure around that, but clearly, that will take us to a much larger size is what is our target. So, I don't want to take a call right now on the short-term targets because yes, this year is clearly, is going to set us back by a year. So difficult to take give you a growth target otherwise. In terms of ROIC, yes, we are very focused on that. We have actually, regretted a few businesses in the past. Even this year, we have kind of regretted a business which I can recollect. So maybe that has, made us lose a bit of a market share, maybe in passenger cars, but it was a conscious call.
Okay, so no numbers, but when you're looking at ROI, when you're looking at turning down businesses, what kind of ROIC do you underwrite to? Is it 15%, 20%? What's the hurdle at which you would take versus not take a customer?
See, well, we have, as you know, we have been increasing our ROIC steadily. We have around 30% now. So, again, 30% comes from, it comes from, every segment has got a different level, so I can't apply the same brush everywhere. So we have different targets because we have to be real to the market conditions as well. So I can't have the same target for each segment. So it depends. I can't really share. As you know, we don't share these figures. But our clear endeavor is to be in the 30% range overall at the business level.
Thank you.
Thank you. The next question is from the line of Priya Rajan from Antique Stock Broking. Please go ahead.
Yeah, thank you, sir, for taking my question. One thing is on your product mix in the two-wheeler and three-wheeler space. Can you just throw some light on what kind of share you have in the front fork and rear shock or monoshock, something like that?
In terms of the numbers of two-wheeler?
Yeah, in two-wheeler and three-wheeler, what kind of mix you have in terms of front fork and rear shock absorber plus the monoshock, etc.?
Okay, so see, firstly, in three-wheelers, of course, there is no front fork. It is only a absorber. But if you see, just to share the figures, by value, it would be, front fork would be about 40-odd%.
Okay. And has it been growing over the past couple of years?
The front fork has actually improved.
Okay.
And going forward, as I shared earlier, once we start the Sanand plant for HMSI, where they are shifting to front fork Activa, this will improve even further.
Okay. Okay, and in terms of, I think how has been the growth in the Honda, because Honda has been quite sluggish in terms of volume. So have you been able to maintain revenue from Honda overall?
And our share of business with Honda remains same. Plus, we also, are going to begin the supplies of the front fork for one of their motorcycles, which was not there with us. So this is something new. They should start. They should have started, but because of the downturn, possibly there is a correction. But we should be starting the front fork as well in motorcycles.
Okay. So when
the share of business-wise, it's steady, and in fact, it will go up slightly once this motorcycle front fork starts.
When do you start this business to start and to commence?
We should start getting an order in September.
Okay. And what about, the Bajaj and all?
Bajaj is steady. As you know, we are capped at a market, a share of business, so we continue to do that. I think, and in addition, as you know, we have got the electric three-wheeler from Bajaj, so that is something new. Yeah.
Okay. But you're not targeting anything from Hero?
Well, we have been working at it literally every year. We had some advanced discussions, but I think the downturn has really possibly changed the plans at OEM ends as well.
Okay. And any plan to arrest this PV drop? I understand, couple of products you have declined and couple of models you are not present. That's why this decline is happening. But in terms of, the new model, new platform, a lot of new PV OEMs are also entering. So how are you looking at that business going ahead?
Yes, so of course we definitely want to increase our market share. It's not that we have dropped many. We have dropped only a few. Dropped in the sense we quoted, but we could not go beyond a certain point. I wouldn't say that has led to a big erosion in market share. The main reasons have been that we have lost on some platforms, as I said, the WagonR and model discontinuation of the Omni and the Alto, which of course will restart in the new avatar from September. So that is one. We are with Alto. There's another new business of Maruti which we are in advanced stages of discussion, which should get concluded in the month of August positively, so that hopefully will add. Then we have got into PSA, Peugeot Citroën. In addition, we also got an entry into Tata Motors passenger car platform, which was not with us. So those supplies will begin by the end of September.
Okay.
So these are two aspects that that should see us, start inching back in passenger car market share.
Okay. So what's your market share as of now in PV right now?
PV right now it's 18%.
18%. Okay. All the best, sir. Thank you.
Thanks, Gabriel.
Thank you. Participants, if you have any questions, please enter star and 1. The next question is from the line of Mitul Jani from Professional Advisor. Please go ahead.
Good afternoon, Mr. Kolatkar. 3 short questions. How much inventory got as of now? That's one. Second, steps taken to shorten the conversion cycle or debtor day. And third one, the countries or the companies you intend to tie up for the exports, other than which you are currently serving.
Okay. Yeah, thank you. So inventory currently is, I would say, pretty high. It's almost at a month, or maybe even maybe a day or two more than a month. Debtors also is higher than our target. I'm comparing against the target that we had for our internal review. So both are, if you ask me, exceeding by 2 days on each side. So we have kicked off again. We kicked off a aggressive drive to reduce cost, reduce inventory, and improve cash flow. So that has already started. The results, unfortunately, are not coming through immediately due to the reason that while we are doing this, the OEs have, again corrected their schedules, as you must have read in the newspapers. So
yeah, that's understandable.
Yeah. So, but definitely we will be able to, once the the market picks up, which I said should start picking up by September, we'll be able to see some correction in this inventory. We have already stopped, ordering in some, especially import items. So that correction has already happened, but the impact will start coming only by end September.
Okay. And second, for the debtor days, shortening the debtor days or conversion cycle.
Yeah, debtor days, again, there is a bit of delay in some cases. So, our market teams are, pursuing that aggressively to shorten it. That continues, but it's, again, the same issue is with the OEM. So, it's going to be a tough challenge for all of us. And tying up for companies for exports, as you know, we have got these two breakthroughs with DAF of Netherlands and Volkswagen of Russia.
Yeah, Koni. Okay, Russia, that's it.
Yeah, Volkswagen of Russia. So both these are by...
Because East European markets are also like untapped. So like what you mentioned, like was the company thinking to exploit those opportunities?
Yeah, so see, East Europe, or actually Europe is in terms of truck market, in terms of truck driving behavior or utilization pattern, there's not much difference when it comes to the customer. So it's a single market, whether it's East Europe or West Europe. So the important point is we have broken through a very key player in that market, which is DAF. So once in fact, as I speak, the first protos are also getting shipped to them. So if once we do a good launch of this, I'm sure this will open up the entire Europe market.
Okay, fine. Thank you. All the best.
Thank you.
Thank you. The next question is from the line of Dhiral Shah from Phillip Capital. Please go ahead.
Yeah, good afternoon, sir, and thanks for the opportunity. So you wanted to become the top 5 player, right? So what kind of revenue you need to generate, in order to be, top 5 player?
Well, if you have to be top 5, as I said, we have not put a number because we don't want to be governed by a number there. But yeah, being a top 5 obviously means, definitely being greater than, let's say, 5,000 crores. So
5,000 crores.
Certainly, it has to be around that figure. Whatever we say about, the other aspects, the top line and size does matter. So yeah, that would be.
Okay. And so what is our FunFrog revenue in the overall pie?
In the overall pie?
Overall revenue.
I don't have that overall, but as I just shared, in two-wheelers, it's about 40%.
Okay.
I don't have the other figure with me right now.
Okay. And sir, regarding the margin, sir, we used to quote, margin of between 9 to 10%, and now we have reached almost 8% up from, 6.4%. So when do you see, this margin again quoting above 9%?
Mr. Shah, it's like this, that we were at 9+% consistently, and when we do that, we also started investing. We never invested in a big way in terms of a greenfield, but we did, as you know, we did kept on doing some debottlenecking, adding investments in each plant, adding a building here and there. So that's on happening. So now the point is we are built for high volumes. So unless the volume comes back in its entirety, it's very difficult to get back to that range. But yes, we said we should not wait for those. Still try to arrest the downward trend, which is what we have done in the first quarter. So for us getting back to 9% plus, we definitely need some tailwind of volumes. And the idea is, of course, as I mentioned earlier, that we are using this time to reduce our mainly it all boils down to break even, reducing our costs and reducing the break even, so that we are in a much better position to reach it more quickly. But otherwise, yes, we definitely need volumes.
Okay. And so what is your outlook for aftermarket? Because we have seen 18% growth. So do you feel this kind of a growth is sustainable?
Yeah, so I have, I'm joined first time by our CEO of Aftermarket, Mr. Amitabh Srivastava. So I'll let him take this.
Yeah, very good afternoon. See, aftermarket in first quarter, because of our new product launches and new product lines, we got some growth of 18%, but generally aftermarket is not growing at this pace, and we are getting a stiff competition from OES also. So we are keeping our finger crossed. This 18% growth may not be possible in next quarter or so, but we are sure that we'll be growing at the rate of 8 to 10%.
Okay.
Yeah.
8 to 10% growth.
Yeah.
Okay. And sir, regarding this railway business, do you have any outlook?
Yeah, railway business, it is good because we have got orders in pipeline, and we have. So I think we are hopeful about our railway business.
Okay. And sir, again, in terms of export, do you see, this is going to again bounce back?
I see in next quarter or so, it is difficult because Sri Lanka was our major market. I am talking about aftermarket exports. And second market was Latin America. So as you know that Sri Lanka, there was a bomb blast. After that, entire economy has gone down. So we are not getting expected orders from Sri Lanka. And from Latin America also, there is a pressure of devaluation of money and the currency. So right now, we are at par as last year. So in next quarter, we are not expecting any bigger growth from the export market.
Okay. Okay. Thank you. So that's it from my side.
Thank you.
Thank you. A reminder to all the participants, if you have any questions, please enter star and 1. The next question is from the line of Arvind Mani from he's an individual investor. Please go ahead.
Hello, sir. Thanks for taking my question. I have 2 questions. Just wanted to get your thoughts on where do you see the segment mix over the next 1 to 2 years. So how do you see the four-wheelers picking up going forward? And second thing is your thoughts on our preparation for the EV cycle, actually. Where are we investing and how do you see Gabriel's role in that?
Thank you, Mr. Arvind. So on the segment mix, definitely our target is to be more in the range of 60% two-wheeler and, let's say 25% of passenger car and the balance commercial vehicles. So as I shared earlier, we have taken some steps to improve our market share in the passenger car, some new models. So it won't happen very soon, but it will happen certainly, as you said, in 2 years' time frame. Certainly that should happen. Coming to EV preparedness, fortunately our product is agnostic to whether it's EV or IC or whatever. So shock absorber will remain. But nevertheless, what we have started is on 2 fronts. One is getting embedded and engaged with the early movers of EV, particularly in 2 and 3-wheeler segment. So we are with all the key players who are manufacturing EVs in both these segments, because that is what is going to adapt the fastest when it comes to EV. And the second aspect is how can we become a part of EV, though our shock absorber does not change. So what we have started doing is lightweighting the product. So we have already given some ideas to OEMs in the passenger car segment particularly. We are actually in passenger car EV as well. We are on the eKUV, we are on the, of course, if there's an e-Nano, we'll obviously be on that as well. So e-Verito, we have always been there. So that's what we have on EV. So while the product does not change, it's important to get engaged with that particular model. So which is what.
Okay, thank you.
Thank you. The next question is from the line of Bharat Ginani from Sher Khan. Please go ahead.
Yes, sir. Thank you for the opportunity once again. So, FY20, would you like to put some kind of a revenue growth that you are targeting? Would you like to comment on that for FY20 as a whole?
For which, your line is not clear. Which year?
So for this year, FY20, would you like to comment on the revenue target? Would you end up flat or would you, register some kind of a growth? Would you like to comment on that?
We've been, again, very difficult to call on that, but yeah, we have managed the first quarter. I think this year is a story of managing each quarter, actually managing each month, if you ask me. So each quarter is going to be different in terms of, the cycle. The first quarter we were able to stay through well. The second quarter, we thought it would be better, but it's, the festive season is still not kicking in. The OEMs are still in a phase of correcting inventories. The third quarter is expected to be festive, and, probably the pre-buy will start happening in third quarter and fourth quarter. So, when I asked even OEMs, we asked at the senior most level, we have asked several OEMs. Nobody is really willing to take a call on which way the market will move. But yes, it will be a story of quarters this year. And again, when we're speaking of that, the first quarter of next fiscal is going to be, I think if something is not done, no major intervention happens from the government, it will be quite a bad quarter. The first quarter of, I'm talking of 2021. So, I would say even a flat growth would be, I think, a great job done.
Okay. No, but I was more understanding from the perspective of your outperformance.
Sorry to interrupt, Bharat. Is it possible for you to call from an alternate number because there is crackling sound coming from your line?
Is it better now?
No,
Hello?
we can't hear you now.
Hello?
Yeah, Bharat, if you can call from an alternate line, please.
Is it audible now?
So, would you like to go ahead?
Yeah, go ahead.
Yeah, hello. Yeah, sir, Mike, I was trying to understand more from the perspective of your outperformance vis-a-vis the industry. Industry, obviously, as you said, that even the OEMs are a bit hesitant to put a kind of a number. But what I was essentially trying to understand from you is you have outpaced really handsomely by about 10% or so, if I would say a number. So essentially what I was trying to understand is are you trying to, will you be able to maintain the same kind of outperformance which you exhibited in quarter one? That was essentially what I was trying to understand.
Yes, I think that's the whole idea. I mean, we want to do that. Certainly, I think some things which we have done in first quarter will continue to help us mainly in the, let's say, the additional share that we got in two-wheelers, and also the good performance of aftermarket. Well, Amitabh did mention we may not be able to sustain that 18%, but yeah, it will still be a good growth. So these two aspects will, certainly help. But unless the sentiment improves, it's really difficult for us to, take a call. But yeah, we'll definitely be better than the market.
Okay, sir. Thanks and all the best, sir. Thanks.
Thank you. The next question is from the line of Arun Agarwal from Kotak Securities. Please go ahead.
Yeah, thanks for the opportunity again, sir. Sir, can you just update on the new Sanand plant? Is it ready or there's still some work to go? And when is this production going to start there?
Yeah, so in fact I was there last month. The plant is, almost ready. In fact, all the equipment is installed. In fact, we have run production also for just to test out the equipment, not on a sample basis. But that will also happen in the month of November. We'll actually do a mass production run as well. But the sale and the billing from this has, as you know, got shifted by a couple of months. So this will happen only in the month of January.
Okay, so that's when the actual
the plant is ready, complete. I mean, it's absolutely on track, and the customer visited, and they actually, were happy to see progress.
And how much we would have invested in this plant so far? I mean, we earmarked like a 46 crore rupees.
That's more or less absolutely the figure.
Okay, and that's, the entire investments have been done. And what would be the capex plan for this year then? Including whatever we would have invested in Sanand this year as well.
Including that, this year would be 70 crores.
And that also includes the R&D plant and the test track center as well, right?
Yeah. So that's also coming up. I think 40% of the work is complete. We'll be finishing that in Q3 of this year.
Okay. All right, sir. Thank you. That's it from my side.
Thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. Manoj Kolhatkar for closing comments.
Thank you all for the questions and queries. Yes, just to end that, really hoping that we see some cheer in the market from tomorrow onwards, Independence Day. I think it's very difficult to lay a finger on what has gone wrong, but as I said, several reasons altogether have caused this really bad sentiment. But the good part is I think the government also has taken note of this. As you would know, there was a meeting by the Honorable Finance Minister with the captains of the industry last week. Whether something will come out of that, I can't take a call, but yes, at least they are cognizant of the fact that the industry is certainly needing some support. Finally, all said and done, this industry supports over 40 million jobs, maybe even more. So yes, things should improve. I'm still a hopeless optimist. We should see a better times going forward into the festive season. So thanks a lot, and wish you all a very, very happy festive season, right from Ganpati to Dasara to Diwali, because I think we'll meet now only in the month of November. So thank you once again, and wish you all the best.